Welcome to Market Momentum, where we break down the forces shaping today's financial landscape. Right now, we're seeing a huge shift in the financial world. The game is really changing, and we're going to break down what that means for you and your portfolio.
So here's what we've got on tap. We're going to start with the big picture, this major policy pivot that's really setting the stage for everything. Then we'll see how it's playing out in real time, starting with precious metals, which are making some serious moves. From there, we'll jump into US stocks. Why are they still such a powerhouse? And of course, we'll look at crypto's big comeback. And you'll definitely want to stick around to the end, because we're going to wrap up with a really crucial question to help you figure out your own strategy in all this.
All right, let's get right into it. There's a fundamental shift happening right now, and honestly, it all boils down to one thing: a massive policy change coming from the US Federal Reserve.
So what's the big deal here? Well, the key takeaway is that the whole period of monetary tightening, the Fed constantly hiking interest rates, that's ending. It's over. For months, that's all we heard about. But now, the tide is turning. Markets are actually starting to anticipate a cycle of rate cuts. And let me tell you, that is an absolute game changer for pretty much every asset class out there.
And this isn't just about stocks or just about crypto. The thinking is that a rising tide lifts all boats, right? So when the Fed pivots like this, the expectation is that a flood of money is going to start flowing back into all kinds of assets. We're talking stocks, precious metals, cryptocurrencies, you name it. This is what's creating this widespread market momentum we're seeing.
Okay, so that's the theory. But let's see how it's actually playing out in the real world. First up, let's take a look at precious metals, because man, things are getting pretty exciting over there.
All right, so for all you chart watchers out there, this is a big one. Gold has broken out of what's called a triangle pattern. You could almost think of it like a coiled spring. The price gets tighter and tighter, bouncing around in a smaller and smaller range. It's a period of indecision. But that breakout, whoa, that's the signal that the indecision is over, and it could mean a new, really powerful upward trend is just getting started.
And then there's silver. If you want a perfect example of just how aggressive this market is feeling, look no further. It has just shattered a major resistance level. What's really wild is that a ton of this buying has been happening during US market hours. And get this, even though all the technical signals are screaming that it's overbought, meaning it's gone up way too fast and should pull back, it just doesn't care. It keeps pushing higher.
So this really brings up a classic question for anyone investing, right? You have two choices here. Do you go for gold, which is kind of the safer bet, the more stable, steady climb in a rising market? Or do you go for the aggressive play with silver? It's got way higher potential for these explosive gains, but it also comes with a lot more volatility and the risk of a sharp drop. Your answer to that really says a lot about your strategy right now.
Okay, moving on from metals, let's talk about US stocks. The resilience here has been absolutely incredible, and they continue to be a dominant force in the global markets.
And really, what's driving all this? While different assets have their moment in the sun, there's one durable force that just keeps pushing forward: artificial intelligence. AI, and by extension the tech-heavy Nasdaq, is still the main engine of this market. It's this huge, long-term growth story that just isn't going away.
So with the Fed getting ready to cut rates, what does that mean for the broader market, like the S&P 500? Well, some analysts are getting really optimistic. Incredibly bullish. We're seeing some long-term targets getting thrown around for the S&P 500 that are pretty eye-popping, with some people talking about a potential move to 8,000 or maybe even higher.
And you can see the market's internal strength pretty clearly. Think about it. Every time there's a dip, it seems to recover with real resilience. We know from the data that hedge funds have been actively buying, and just like we saw with silver, markets have a history of staying overbought for a lot longer than you think. And technically speaking, both the S&P 500 and the Nasdaq are back inside their rising channels. The trend is still up.
All right, last but not least, let's talk about crypto. For a while there, things were looking pretty rough. But now it really seems like the crypto space has found a solid bottom and is starting to gear up for a new upward cycle.
So here are the key levels you've got to watch. These are the lines in the sand. For Bitcoin, that magic number is $93,500. If you can break through that, it's not just a technical move, it's a huge psychological win that could really accelerate the rally. Same story for Ethereum at 3,200. That's been a tough ceiling to crack. And for XRP, if you can get above 2.24, that could finally bring a lot of people back into the fold.
Okay, so let's recap. We're seeing bullish momentum pretty much everywhere you look. Metals, stocks, crypto, it's all pointing up. Which brings us to the most important question of all. What do you do about it? How do you play this?
Right now, every single investor is dealing with this core conflict. It's a tug-of-war in your head, right? On one shoulder, you have the fear of missing out, FOMO, on what could be a massive rally. But on the other shoulder, you've got the fear of a sudden, sharp reversal after these big moves. It's a classic battle. Do you go on the offense or do you play defense?
And you know what? There's no single right answer here. At the end of the day, your strategy has to line up with your personal risk tolerance. So the question this market is asking all of us is this: in a rising market like this one, do you prioritize capturing those aggressive gains, or is your number one job to protect the capital you already have?
We hope this analysis gives you a clear framework for understanding what's happening in the market right now. Thanks so much for joining us. Your subscription and likes are always appreciated.